Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan. Thank you so much for being with us again today. We have an exciting and very informative guest with us today who is a veteran in all kinds of different types of investment. Ken Sheppard is a creative finance specialist in real estate deals, and he has also engaged in ventures across entertainment, communications, energy, sports, and tax credits. With a background spanning the entertainment industry and Wall Street, he now leads Creative Flips Incorporated, where he orchestrates unconventional deals in technology, green energy, healthcare, and professional sports, where he monetizes revenue. Recent strategic partnerships have enabled Creative Flips to receive debt cash flow up to $100 million, providing funds, assistance for capital stacks, and secure proof of funds up to $500 million. And he has worked alongside media giants such as Niall Henson. So welcome to the show, Ken. And
Thanks a lot.
You bet. Take us into the show, Ken, and just tell us about how your journey took you from a background in the entertainment industry and Wall Street to actually creating and leading Creative Flips.
Well, sure. So thanks for having me, Alan. Really nice to be here again today with everybody. I started my career after college in the entertainment business at William Morris, CBS, Fox, and Warner Brothers, doing finance and business work. Eventually got into producing and executive producing content. I most recently consulted on a picture with Steven Spielberg's company, Amblin Partners. And so we're very familiar with that particular industry. We also do a lot of work in real estate and general business finance. We moved out of the entertainment space in the early 90s into real estate because they had changed the structure of how they would allow us to finance contracts at Warner Brothers and places like that. And we started doing a lot of work in fix and flips and different kinds of properties, for buy and hold and things like that, and creative financings of all kinds. I created a radio show called Making Money in Real Estate When You Have No Money, teaching people how to make money in real estate without spending a dime, and more importantly, not having to pay for the information, because I wanted to really help people just create jobs and stuff like that. I should also say that the Amblin situation, we received a website credit as executive producer, but not on screen because of some consultation work that we did. But in any event, we're very connected to a lot of capital. Our capital growth has significantly increased. One of our family offices that we directly work with carries 100 billion with a B assets under management. Right now, they're one of the largest family offices in the world. So we have very, very deep capital markets reach, and we're always looking for opportunities to help people get deals funded, because as they may have said, it creates jobs, feeds families, funds companies, and creates family legacy. And that's pretty much a little bit about us on the business side. On the personal side, I'm a cancer survivor of multiple myeloma bone marrow cancer. I'm in remission 6 years. 7 years ago, we found out about the cancer. You have to fight it. You have to never let it win. It's a daily battle, but here I am.
And we are so glad that you are with us. And I didn't mention, but Ken is a returning guest. He was with us about 3 years ago, and he actually was on 2 different episodes when we were broadcasting under our previous label of Creekside Chats with Successful Real Estate Investors. And so you can find him there. Those episodes are still available on YouTube. Well, Ken, fascinating life that you have led. You just mentioned that you just finished a project with Steven Spielberg. Tell us a little bit about that.
So we were approached to finance a project, which did not end up being financed by us, not for anything we did wrong. We brought through an investor that had already worked with Amblin Partners before, which is Steven Spielberg is part of that company. But because we worked so hard to help put it together, and even though our investor did not fund, he had funded with them before, as I said, so we all expected that he would not default, but he did. But they still were kind enough to give me an executive producer credit on the website, not on screen. And but we live by our veracity, and nobody held me accountable really, from the standpoint of anything we did incorrectly. It's just the investor, just for whatever reason, things happen sometimes. He just was not able to perform, to my last knowledge. But we work with a lot of people in real estate, very large transactions. We're looking at something right now that's actually the largest one I've ever looked at in the municipal space. It's a loan against a municipal bond, AA rated by Standard & Poor's for a municipality, and it's backed by not only the good faith and credit of the city, but also by the other layers of the state and the United States government. So it's pretty secure paper, and we're in the midst of those negotiations as we speak. As an example, they're looking to do a $10 billion raise in $500 million increments. However, we're not certain that they can really absorb that much. It's all about rebuilding their downtown sector and becoming more vibrant.
You say you work with large transactions. Is there a minimum amount with which you would be interested in working?
Yeah, I mean, I've looked at deals for 50,000 in the hundreds of millions. To me, it's all about creating an opportunity for people to grow, and we grow with them. We're all about winning and seeing people do better. There's a lot of people that have benefited from what we teach and in what we do, and we benefit along with them. We try and keep a really honest relationship at a very high level, and tell people the truth and not oversell, but undersell and over deliver. I think that's really important. A lot of times it's the other way around, and so we're finding that in today's market, you have to, even more than ever, carry that veracity.
Mm-hmm. That is for sure. There are a lot of people who do not act with integrity, and you have to be careful out there in today's world.
Absolutely.
So, Ken, how do you go about approaching the formation of strategic partnerships, and really, what are you looking for in potential collaborations?
Well, everybody's different. Every situation is different, right? But we look for people that have capital and deals, or they at least have had it under contract, and it's something where we can go in and work with it without it being under contract or without it being owned in partnership. You're really kind of throwing your efforts at the wall, not knowing whether they'll get it under partnership. We've been asked many times to issue a term sheet subject to them getting it under contract. We can't do that because that's just not the way we operate. There are people that will do that, that will help you that way, but we're of the peace of mind that if we're going to get involved in something, we definitely want to know that somebody has put in the work to get that asset under contract, or if it's a company, that it's a company that's growing, it's got capital in it. We're not really into the garage opportunities, although I've done stuff. I was with the Los Angeles Venture Association for 2 years as part of the middle marketing committee, and we discovered how few deals they actually do in venture capital. They like 3 out of 1,000, so those odds aren't really good. But we spend a lot of time in, maturing relationships on capital side, because the deal flow is only available to be executed once you have the capital, not the other way around. You can have the deal forever and not ever get it funded. But if you have the capital, then we go then after situations or approach people and such like that, saying, look, we're capitalized to do this, and we're happy to partner with you, or we'll take the project, or we'll buy the company, or whatever it is.
Mm.
We do business financing, real estate, and entertainment. We've done hundreds of millions of dollars in deals, and certainly always looking for opportunities to help people grow. And the reason we did the radio show was I was spending a lot of time helping people without the radio show and having to repeat myself many times. So by doing the radio show, it allows people 24/7, 365 to be able to go and get the assistance they would need, without us having to be involved until they get further down the line. And we've had people to listen to all 60 half hours, and we've had people to listen to 3 or 4, but in any event, if it helps them, that's fine. And it's called Making Money in Real Estate When You Have No Money. It's on blogtalkradio.com.
Do you invest with real estate syndications?
We can and have. It depends on how many partners are in the syndication, but we have looked at those kinds of situations. We generally look at deals that are our formulas generally with operating real estate. Land's about 40% of today's value if it's just bare land. If it's a property that's built already, it's generally 60% of today's market value minus repairs. Because if you go in with more than that, you're potentially putting yourself at risk. And I think 40% margin after repairs is pretty safe. And we've been able to see deals like that today.
Do you invest on the LP side or on the GP side?
Both.
Both. Okay.
We can help on, we can be the GP, or we can be LPs with other GPs, or we could partner with other GPs, or sometimes we buy the whole project and just take it over. It's a situation case by case. It's whatever somebody needs, and we try and then fit that into our pocket as to how we can help with the financing. I will say one thing. People say there's a lack of capital. There's never, ever a lack of capital. There's only a lack of good quality structures to put that capital into. When you find a criteria situation, a criteria that fits a capital investor, the checks will roll.
Yeah. So outside of the 40% margin after repairs, what other criteria do you look at?
Location is important. Although we have bought in some very challenged locations and done very, very well. And I think we always want to know there's a story behind every deal. Why are they looking for capital? What is the situation? What caused them to need the capital? And then how can we be part of that resolve? Whatever it is we're doing in any industry that we work in. The only industries we stay out of is anything involving marijuana, anything involving pornography and such like that. Even though you can make a lot of money in those businesses, this is a personal choice that there's so much to choose from today that we just prefer to stay out of those sectors. But there's an enormous need for capital, especially today with the banks constricting. There's a lot of opportunity for private cash. The banks are being just so spectacularly selective that it's really, really difficult to get them to do the kind of things that they can do on the private side.
What can you share in terms of insight into how you typically navigate regulatory challenges, especially in the sectors of green energy and healthcare?
Well, you certainly have to live within the guidelines of the government. Whatever we do, we always make sure we're compliant. Compliance is really, really important to us because you don't want to have a situation where you don't have all the proper clearances, all the proper paperwork, all the proper due diligence, and try and kind of like skirt the issue. And we never do that.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, there's a lot to stay informed about just within really in just one segment. And you work across all kinds of different segments. So how do you keep yourself informed?
We read a lot. I follow a lot of different people that I think are really strong, like guys at BlackRock and Blackstone and Apollo and KKR and Guggenheim. We follow those guys and what they do. I've always felt that if they're going to go into a particular place and start building, that tells you something. If they're leaving that place, it also tells you something else. So we kind of use their research to make decisions on what we do. We also watch what's happening with the markets in terms of interest rates. Obviously we're in an election cycle, so we may hear that there's going to be some discounts, as incentives for the election, but that's yet to be seen. What we're really looking at is past 24. What is the economics are going to look like? We think 25 and 26, there's going to be a lot of discounts on real estate notes and to stay on real estate notes and real estate properties themselves more and more, as especially if interest rates keep going up. I mean, you can't, if you're going in to refinance a building today, it used to be like 3 or 4 or 5, now it's 8 or 9, or more. So even at the banks, when we were getting quoted on some loans against different kinds of assets, they're quoting around in just underneath 10 and maybe even higher, depending on what the asset and the risk is. So they have to be careful, because when they borrow money, when they get money and they pay out deposits, they make their money basically by the margin between what they collect on the collect on the loans and pay out on the deposits. Plus they can leverage again with the government on some of their deposits. So they're very careful and they're very prudent. But we've also found that the private side has been really flourishing. There's so much capital out there on the private side chasing deal flow that they fit, as I said, fits their criteria. It's not easy to find that. Certainly not easy for people to bring us stuff that fits our box either. But we have to, when we see something we think is worth pursuing, then we pursue it with vigor.
Yeah. Well, it certainly has been challenging in the multifamily arena for the last couple of years. As interest rates increased, many sellers were holding on to really unrealistic prices. We've started to see that crack a tad bit as sellers are starting to become a little bit more realistic. But then also, what you are saying is that many people are going to be forced in a situation where they're going to have to refinance at much higher interest rates than what they had projected. And we've actually been hearing that for the last, certainly the last year and a half. And we are starting to see that happen. What's your perspective on how is that going to turn into a landslide, or is it just going to be a small creep, or what do you anticipate there?
So there's a lot of paper, when I say paper, loans and such, coming due in the next 2, 3 years, right? And if they can't refinance, then they're going to have to do something else, bring in a partner, sell the property, whatever. Sometimes, the values have dropped. Sometimes they're going up. So you have to look at each market and see, okay, is this a market that's increasing, decreasing, such like that, and judge everything accordingly. I think there's going to be a lot of discounts being taken by sellers, by banks. They're carrying back property. They're going to have way too much property that, it's going to be like 2008 on steroids in terms of, I think a lot of the leverage is just to not be there for people to be able to go out and refinance their properties as easily as they might have a few years ago. Inflation adds into it, of course, too, because what cost you a dollar perhaps a year ago cost you $1.75 in some cases today. And, and so somebody says, I made more income. Well, did you make more income than the cost of inflation? If you didn't, you're actually behind the curve. And so you have to really watch that closely. What is the government doing on the national level? How's our national debt? Because that determines the rating of the country, the rating of everything, and how the banks are pricing their loans. So I think there's going to be a lot of challenged situations. there's going to be a lot of people that are going to need help. And, we're positioned with a lot of other people around us to take advantage. If you watch the markets, you're seeing companies like Blackstone, like BlackRock form multi-billion-dollar funds and prepare for this exact event. So again, we follow those kinds of guys because we know they do very, very heavy due diligence and research, and that gives us an indication of where we think the market's going.
Mhm.
And we talk to them as well.
So you're saying that that the big equity firms are preparing for this. What impact do you think that they are going to have upon the markets, being that they have been looking to this and that they're prepared for that? What kind of impact is that going to have on smaller investors like myself and other syndicators like me?
They're going to be going after the very large opportunities. They're not going to be going after the small transactions. They're not going to be looking at buying a house or buying a 4 unit. They're going to be looking at buying thousands of units at a time or thousands of apartment buildings or whatever they're going to buy, if it's real estate. And they're going to be doing a lot of debt financing as well. We've noticed that they're building big, not just big equity pools, but they're also building very large debt pools to be able to capture debt at a discount or make loans, because their feeling is that there's going to be limited opportunities, especially for much larger businesses, to be able to find options to finance. And that's one of the areas where we excel, I hope, is kind of filling that void where it's not like a $5 billion deal. It could be, but it's more likely a $50 million deal or something like that, where maybe even less, 25, 10, 5 places where they won't play. So we like to be in areas where there's less activity than with somebody like BlackRock. BlackRock has to do very, very big deals. We don't.
Well, that is encouraging. So there's for I think what I'm hearing you say is there's still going to be a space for the 10 to 20, 30, $40 million apartment acquisitions
And smaller,
and smaller. Yeah.
because there's a lot of, as I said, the institutional guys at that level are not going to be looking at a 4 unit. They're
Yeah.
not going to be looking at a 10 unit. They're looking at thousands of doors at a time.
That's
So
hard.
there's a big opportunity with small assets
Mhm.
and smaller assets. I mean, we're not afraid to buy a house, but they wouldn't buy a house.
Mm.
They'd have to buy 500 houses. We don't.
Yeah.
But most of our stuff it's either portfolios of properties or loans, or it's more likely just somebody that just needs capital to grow their deals. Construction money is very difficult to find. We have relationships for construction funding. If at the end of the day there's enough margin between what you spend to build it and will they come, and if you
Mhm.
believe they'll come, is it going to have enough equity in it when you're done? You generally don't want to be in any construction deal more than maybe 65%, including all the equity, debt, and everything else of the finished value,
Mhm.
stabilized value in the case of income producing property.
Well, can you provide us an example of a particularly challenging deal that you successfully executed, and what was the outcome of that?
Sure. You mean in real estate or in just in general?
Well, particularly in real estate. Yeah.
Yeah, I mean, we had a deal recently where a guy had a very, very large piece of property that was in bankruptcy, and we brought him a term sheet for $33 million to get him out of bankruptcy. And he chose not to accept that. Now he's in a worse shape than he was before, but we were ready to close on that. And we are finding that sellers and borrowers are allergic to these higher rates because they're used to much lower rates, but
Mhm.
the marketplace is just not giving it to them. We're seeing, we closed a deal. It's not in real estate, but it's a very interesting deal. This guy was buying some equipment, and when he went to buy the equipment, he needed some cash. And I convinced the seller to let the seller put up the equipment at the close as collateral. Like when you buy a house, you don't pay cash and then refinance the house. You get a loan against the house. So I convinced them to do that, and that helped a deal which was a $50 million write down to about $1.5 million from a private equity company that really just had all kinds of problems. And we were able to successfully execute on that. And and we got a call from the attorney afterward, and he says, I can't believe you came up with the idea that you did, because we've been trying to figure this out for a long time. And I said, well, it's very simple. You just have to treat it like you're giving the asset to the deal, so the asset can be used for the deal rather than forcing the person to come up with all cash and then refinance that asset after the close. So that's an example of what I consider very creative financing.
For sure. Well, we are talking with Ken Sheppard. And Ken, you can be found on Facebook. And also, your email is fci@pacbell.net. And you have a previous radio show, and that is still available. What is the name of the show again?
It's called Making Money in Real Estate When You Have No Money. Teaching people creative financing with other people's capital, other people's assets, and other people's property. Even in many cases, you just need to, there's ways to do it without any cash from your own pocket whatsoever. And it's on blogtalkradio.com. And all you have to put in is the name of the show or my name, KENSHEPPARD, Creative, CREATIVEFLIPS, Inc., 3 words, and you'll find the show on Blog Talk Radio in the search box.
All righty. Well, Ken, one last question, and that is, what is your advice to someone who's looking to enter the field of creative financing and venture capital orchestration?
Well, I'd say first and foremost, listen to our radio show, because a lot of people were paying $20,000, $30,000, and unfortunately, a lot of those didn't work. And that's what drove me to do the show. I don't charge anything. I don't even know who's listening. I just know we've had well over 100,000 listens in the radio show, from independents and individuals all the way up to major corporations who have reached out to us, as an example, like BlackRock. So it's all about, one other small tip I would say is, if somebody gives you 5 dates to choose from in terms of when they're available to speak to them, take the one that's soonest.
Okay,
If you can.
Why is that?
Because you get things done quicker,
Mm-hmm.
and because I think it shows the people on the other side that you're really trying to take the soonest possible path to so like if they say, well, I'm available Tuesday at 2, Wednesday at 4, Thursday at 6, take the Tuesday at 2 if you can all do it. I just think people think, wow, they took the earliest date I gave them. That means they're trying and they're motivated and they're trying to get something done, rather than a date that's 2 weeks out.
Very good advice. Well, Ken Sheppard, thank you so much for being with us again today.
My pleasure.
Enlightening conversation as always.
Sure.
And enlightened investors, thank you so much for being with us again today. Please take a moment to like, share, and subscribe. And if you would, please go to your favorite podcast app and leave us a rating and a review. Until next time, live abundantly in all areas of life.
That's right. Thank you so much, Alan. I appreciate it.
Thank you, Ken.
You're welcome.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.